the tea leaves. This will not be available to the general public. It's one of the reasons why you folks are subscribing, if you will. This is not available to anybody on the internet. It is going to be more private, and only those people who are attending the webinar or who asked to attend the webinar will be receiving them. What I wanted to do first, if it's okay with you, is I did want to review market tea leaves in terms of the outline. And I want to do this for the newer members or the newer subscribers. Some of you folks have been with me for a while, already pretty much have this down pat. But there are those who are relatively new to market tea leaves, and I wanted to kind of briefly explain the outline, and then we could talk about some trading, etc., and how we could use market correlation in tandem with daily trading, okay? One of the first things I do every morning is I take a look at the things that are driving the markets. In other words, the U.S. dollar, energies, financials, the indices, how they're doing, what the price of gold looks like. Is it trading up? Is it trading down? The very next thing I do after analyzing all this is I come to a conclusion. And basically what I'll say is this is a correlated market. It's correlated to the upside. It's correlated to the downside. Or conversely, this is not a correlated market. And I'll state the reason why I feel it's not a correlated market. I'll also talk about Asia, Europe, at that time in the morning, and I usually do this very early in the morning. Europe is live, it is trading, so we talk about that very briefly in terms of what's happening there. I also talk about any special challenges, and these are pretty much economic news reports that will be coming out during the U.S. trading session. I think it's important to keep your eye on that because these things can be market movers. And then I'll talk about what happened yesterday and talk about what I expect is going to happen today. But I'll also state, could this change? Absolutely. I mean, case in point, on Friday, I said my bias is to the downside. But we have advanced GDP, which can and will be a market mover. Now, what happened in the market? Well, the Dow did close up. It closed up about maybe 12 points. But the NASDAQ and S&P did not. So it's something that you really need to take with a grain of salt. The next thing I'll do is I'll talk about a news item, if you will, that's pretty much in tandem with the title of today. For example, I'll talk about advanced GDP. I'll also include some interviews with individuals that I consider to be trading leaders. We will be having some new ones coming out this upcoming week, so you might want to keep an eye out for that. I'll also talk about the crude market. Basically, where crude is trading relative to the U.S. dollar. Is it normal? Is it not? Is it not normal? In this case, it wasn't normal because both crude and the U.S. dollar were declining. They were not correlated, and it's not normal because, in essence, crude should always have an inverse relationship with financials. Again, I'll talk about the best times of the day to trade crude. Another thing that's of interest is any kind of articles that we have published. Now, one of the things you should be aware of, and it's one of the things that I wanted to point out to you, is that besides publishing market tea leaves, I also write independent articles, and they are distributed amongst maybe half a dozen different publishers. At any given point in any day, market tea leaves could be viewed, not that it is viewed, but could be viewed by upwards past 3 million viewers worldwide, because we do publish for maybe half a dozen different publishers, and they do syndicate market tea leaves to their followers, etc. So it kind of gives you a flavor in terms of what this all is and what you're a part of, in essence. I guess one of the things that I would also like to do would be to talk about, well, why did I create market tea leaves? How did it all come about? I was a stockbroker for the longest period of time. I started trading way back in the early 1990s, and I saw over time certain things that were happening. When these things happened, markets reacted in a certain way, either to the upside, to the downside. Sometimes it was just flat and neutral, etc. I talked to some of my trading friends about this, and they said, well, you should be writing about this. You have something that no one else is really even discussing. No one's even talking about this type of stuff because really what you're trying to do or attempting to do is give folks an idea as to what market direction is for that day. You should be writing about this. Hence, that was market tea leaves and how it all came about, and market correlation, if you will. I saw a number of things, I guess, in the late 1990s and the early 2000s that would lead me to believe that most traders out there don't really, look beyond certain things. I mean, they see what they see and they just kind of go with it without giving much food for thought for it. And in essence, a lot of folks out there, and I'm sure you know many of them yourselves, they got killed by the markets. I mean, I know individuals that were, considered to be big-time traders at one time having to file bankruptcy. Not for any other reason other than the fact that they were overly aggressive, didn't have their thinking cap on. They were not what I would consider to be wise traders, if you will. My goal and objective of Market Tea Leaves is very, very simple. I want you to keep as much of your hard-earned trading capital as you can, because the fact of the matter is this is a business. And one of the things that drive this business is trading capital. And let's face it, without trading capital, there is no business. This is nothing more than pragmatic reality. It's a sad thing, and basically people I know who've had to file bankruptcy, etc. But it's my aim and my goal, my objective, to make absolutely certain it doesn't happen to any of you. And I hope I'm doing a very good job for you. I truly do. So now, that's that, if you will. Let's talk about some trading, okay? And what I'm going to be doing is I'm going to be showing you probably something you've never seen before. And please do me a favor, if you feel that you feel the need to ask any kind of question whatsoever, don't be afraid to ask, because I'm going to be answering them as we go along. And if time avails, maybe at the end of the session, if anyone has any questions, feel free to type them in, etc., and we'll discuss it. Well, what you're looking at right now is a chart of the crude oil contract. It's a CL. It's a June 2013 contract. It is not a typical chart, if you will, because this chart uses something called Renko bars, if you will. Now, why do I use Renko bars? I use Renko bars primarily for two reasons. First and foremost, Renko bars, at least for me, give me a good sense of direction, give me a good sense of when a trend is starting to formulate. And one of the things that I like to do is, look, I'm a trend trader. I don't like scalping. I mean, I'll do it if I think it makes any sense, but ordinarily I wouldn't necessarily recommend, nor would I advise any of you to do it. But look, if you scalp and you feel comfortable with it, then by all means do what you got to do, okay? And what kind of a message is this? I have no idea what this is even telling me, folks. Sorry about that. My apologies. The other thing I like about Renko bars is Renko bars have a certain degree of predictability. In other words, this is a 5-stack Renko bar, right? Now, if I take a look at this particular bar over here, I see that it goes to a low of 92.09. What this will do for me is I will know, if this goes to a low of 92.09, I'm going to know where the next bar is going to open up. I know it's going to open up 5 ticks higher, 92.14. If I go to the next bar, it's showing me a low of 92.14. It's also showing me that it opened at 92.14. I will know at the end of this bar it's going to close at 92.19, and the very next bar is going to open up at 92.19, and certainly, and sure enough, it does. It gives me a certain degree of predictability in terms of where I should make entries. That's kind of what I like about Renko bars. Oh my God, I don't believe this. Keep the current color scheme. Sorry about that, folks. I have no idea what's going on there. One of the things I can tell you, I think while I was seeing that kind of message, is I am going to be upgrading to Windows 7 64-bit versus 32. 32-bit has not been behaving properly, if you will, so I am going to be upgrading and migrating, but still we shouldn't see that kind of message. Sorry about that. But it does give me a certain degree of predictability in terms of where the next bar is going to go to. Okay? Now, because this is a market correlation, we need to take a look at, okay, well, if I'm going to be measuring crude, what am I going to be measuring against? Well, let's take a look at something. On Friday, we had crude, and crude was down. If we take a look at the U.S. dollar, the U.S. dollar was also down. Well, if I know that crude is correlated, if you will, with the financials, what would my next logical choice be? If I couldn't do it against the U.S. dollar because they're both trading down, does anyone have any idea what I could use in terms of a correlated asset, if you will, versus crude? Any ideas? Anyone? Again, feel free to type your answer. Well, what I could use the 30-year Treasury bond. And if you take a look over here, this is a correlated asset with crude. Why? This is trading up, and crude is trading down. So in essence, they have an inverse relationship with one another. If they have an inverse relationship with one another, they are in fact correlated, because crude is always going to have an opposite reaction to whatever the financials are doing. Make sense? Okay. Well, if that's the case, and I know that I can't use the U.S. dollar, and again, this is Friday, well, what could I use? Well, I could use a Treasury bond, commonly called the ZB contract. And let me see if I can bring this up for you so you can see the full chart, if you will. This is the full chart of the 30-year Treasury bond, commonly called the ZB. Same month, except it's not a Renko bar chart. It's a 5-minute chart. Okay. Now, one of the things I point out with the market tea leaves, specifically when it comes to crude, I point out that there are certain times of the day that crude should be traded, because typically over time, one of the things I noticed is it typically makes moves around 7 a.m., 9 a.m., 2 p.m. in the afternoon. Well, let's take a look at something on the 30-year Treasury bond at around 7 a.m. Now, there are differences between this chart that you're seeing here in crude and the 30-year Treasury bond. One of the things that you're seeing over here, this particular indicator is called the CCI index. I think it's a commodity cost index, if you will. And what it does is it measures the prices of the various instruments that you're looking at. Another thing that you see in these charts is something called the Darvas box. The Darvas box is available on any or should be available on any trading platform that you use, whether you're using TradeStation, multi-charts, etc. It's a very, very common indicator, if you will. And what it does is it measures short-term resistance and support. Now, at around 7 a.m., I'm looking at something over here. What am I seeing? I'm seeing the CCI index go to almost a point over here. I typically will have either a V shape or a U shape type of setup. Now, I know that typically crude generally is going to move around 7 a.m., not exactly at 7 a.m., it's time approximate. So what am I seeing over here? I'm seeing at 6:45, it hit its high over here against his upper level Darvas box, meaning it hit resistance. And when it does this, typically what happens is it's almost as if the chart is telling you, okay, I've gone as far as I can go for the time being. I'm not going to go any further. So I'm going to reverse course. This is giving you an indication that there is an impending change coming, or an impending change forthcoming. Okay? Now, if we were to take a look at crude, and typically what I do with these charts is I leave them both up at the same time because I want to be able to measure one against the other. Now, at around 7 a.m. on Friday, what do I see? I see that this has hit its lower level, the lowest level of its Darvas box. It's hit a support, which is to say I've gone down as far as I can go for the time being. I'm not going to go any lower right now. So I see here at around 5 o'clock or 5 a.m. it's trading at 92.84. But I see the exact same thing at around 7 a.m. or a little after 7 a.m. When this thing comes out, over here at around 6:45, what it's giving me is it's giving me a warning signal. An impending change is coming. So what am I going to be on the lookout for? If this thing is trading to its high, right? And there's an inverse relationship between crude and financials, right? Well, this is telling me, okay, if I hit my high, something has to hit its low. If I'm going down, it means that something else is going up. Do you see that? Is that relatively clear to you? Okay, all right. So what happened is at around 7:06, crude started to go in an upward pattern. And look where it went. It went from 92.84 up to 93.39. Now my question to you is, could you make money in a trade like that? I would think you could. Does that make sense to you? Okay. The other thing, as I said, that I like about the Darvas or about the Renko bars is it gives me an idea, okay, well, it hit its low here in 92.84. The very next bar, I mean, if all is well, I mean, what it's going to show me is the very next bar is that the low is going to be 92.89. And sure enough, the very next bar, it's 92.89. The very next bar, it's 92.94. And understand, there's a 6-minute time difference between where it hit its low to this particular bar over here. So my question is, do you think that that's enough time for you to be able to react and capitalize on this trade? Because personally, I think that if you're a trader or doing any kind of trading whatsoever, particularly in the futures market, you know that this is in effect an eternity. Because typically when you're looking at minute bars, I mean, these things are moving at lightning fast speed. So what I like about Renko bars is it's giving me a good idea as to where I could potentially get in. Unlike a 2-minute or 3-minute or 5-minute bar, which is very erratic because it's going up and down, up and down, up and down. So it's kind of leaving you to guess, okay, well, where can I get in? You know, how many tick difference should I take from low to where I want to get in? Sometimes that's very, very difficult, and it really drives some traders crazy because they're wondering, okay, well, I don't want to pay high for it. You know, I want to get in as low as I can. Where could I potentially get in? A Renko bar will take that away from you because you will know as that bar is transacting, you will know, okay, well, if it's trading at 92.94, 5 ticks later, I can get in at 92.99. And if I got in at 92.99, well, I could ride this thing all the way up if I choose to. Or I could turn around and say, well, look, I only want to get 25 ticks out of the trade. Okay, if I got in at 92.99, could I make 25 ticks or 20 ticks? Well, yes, you could. Absolutely, you could. So again, my question is, could you make money on a trade like that? I would venture to say you probably could. Okay? Next thing we're going to look at is 9 o'clock. Now, ordinarily, understand something. If the U.S. dollar was correlated with crude on Friday, this chart would be U.S. dollar. I want to make that very, very clear to you. The reason why I'm not showing you U.S. dollars only for one reason and one reason alone. The U.S. dollar and crude were not correlated. They did not have an inverse relationship with one another. I'm showing you a 30-year bond chart because there was an inverse relationship between the two. Okay? So I'm looking at 9 o'clock. I'm not really seeing anything that's wowing me to death, to be perfectly frank with you. Because typically for me, when I trade, I usually like to see something like this. Maybe something like this, but it's really not necessarily wowing me to death. But I do see something very interesting at around 10 a.m. This thing has hit its low, and look at this V right here on the CCI on the CCI indicator. This is telling me, okay, it has definitely hit its low. And what's going to happen next is going to go higher. If I take a look at crude, again at around 10 a.m., if this is going higher, it would mean that this would be going lower. And I see right over here, just before 10 a.m., 9:56, I see that crude has hit it hit a resistance point because it hit this plateau over here, and basically should be going down. Now, this is going up. This should be going down. And even if I wanted to wait until, let's say, 10 a.m. because I was a bit skeptical, well, I could do that too. I can know, again, using a Renko bar, that the high of the very next bar, if it hit a low of 93.24, which is showing here, the very next bar that should open is 93.24. And sure enough, it opened at 93.24. It hit its high at 93.24. I could take a trade there. Now, if I shorted this, which is pretty much what I would do in this case, and I got in at 93.24, I can get probably 20 ticks out of this. So the question is, could you make money in a trade like that? Well, yeah, you could. But the difference is that because you're using market correlation, you have something that's confirming the move, if you will. Whereas if you're just looking at this chart alone, well, you're going to see a high over here, and well, maybe I get in, maybe I don't get in. Basically, the whole idea behind market correlation, by using a correlated asset, is to confirm that move. And that's pretty much what you would see in this type of situation. Does this make sense to you? Again, feel free to type in any comments if you like, if you will, or if you have any particular questions. All right. Now, another thing that I could show you, or I'm prepared to show you, is I know that some of you folks like to, you do like to trade currencies. Some of you like to do that. All right. One of the ones that some people are very curious about these days is the Japanese yen. So, what I'm going to do is I'm going to get rid of this chart. I'm going to get rid of crude for the time being. And let's see, I'm going to bring up the Japanese yen. And once again, it's a Renko bar. Very much liking what we saw with crude. But this time, what I'm going to do is I'm going to bring up the U.S. dollar. Now, what are the best times to trade the Japanese yen? Well, some people like to trade at night. All right, I don't, only because the Japanese yen is very erratic with the Nikkei index opening up in Japan in the evening hours. Typically, it's a little too early in terms of trading it. What I found, again, this is my own personal thing, my own personal opinion. What I found is that Japanese yen typically likes to make moves at around 8 a.m. East Coast time in the United States. But once again, we're talking about market correlation over here, or pairs, if you will, in terms of currencies. So typically the same principle applies. If one is going up, the other, in theory, should be going down. All right, well, this is Friday, and this is roughly 8 a.m., okay, for the June contract Japanese yen. Let's take a look at what the U.S. dollar is doing at around that same time. Well, again, if we take a look at what's happening right over here, I mean, we see this nice V-shaped formation with the CCI index. And this time happens to be 8:05 a.m. Again, East Coast time. We see that the U.S. dollar has hit its plateau. In other words, it's hit resistance. And basically, the market is saying, okay, well, look, for the time being, I've gone as far as I can go. I'm not going any further. So there's a change coming. There's an impending change happening. Well, what's happening? Well, if we take a look at what happened is the U.S. dollar dropped. And take a look at what happened to the Japanese yen. Right around the same time. Again, these are time approximates. They're never going to be exactly 100% right on. 8:05 over here, could be 8:02 over here or 8:03, etc. But again, by using Renko bars, it gives you an idea as to where you could potentially get in. Now, if you took this trade, again, my question is, could you make money on a trade like this? Well, you could have gotten in at 101.36, or you could have got in at 101.41. Five ticks later. Well, if you went in at 101.41, this thing went to a high of 101.91, and not that great a period of time. This is like less than half an hour. So again, my question is, could you make money on a trade like this? I would venture say that you could. So basically, what I could also do is, we could take a look at, the previous day, but it's probably going to show pretty much the exact same, well, not necessarily the exact same formation, but it'll give you an idea if one is going up and maybe the other one's going down, etc. Let's see, this one's around 6:30. Again, around 8 a.m. Okay. Now, this is Thursday, the 25th. And again, it's around 8 a.m. We see over here that basically the Japanese yen hit a plateau, which happened at 6:30 in the morning. However, as 8 a.m. progressed, it didn't go any higher. It pretty much stayed the same. It probably stayed the same level, up, down, up, down, up, down, but it stayed at a high of, 10087. It did not go up any higher. Now, let's see what the U.S. dollar says. The U.S. dollar a little after 8 o'clock. In fact, I think this is around 8:20 or something like that. Yep, 8:20. It hit a bottom, made a nice V-shaped high formation right over here. And typically when this hits bottom, it generally tends to go up, which it did. Well, if this is going up, what do we think is going to happen with the Japanese yen? Well, it's going to go down. Again, because they have an inverse relationship with one another. Now, what I could have done is I could have said, okay, well, let me wait a couple of bars, see what's going on. This hits a low of 92. The very next bar is going to open up at 92, hit a high of 92, and drop five ticks to 87. The very next bar at exactly 8:30, ironically enough, is going to open up at 87, hit a high of 87, and drop. Now, where did it drop to? This thing dropped about 35 points from entry, 35 ticks from entry. Now, mind you, the Japanese yen trades at, for every tick, that's $12.50. So, you could do the math. But what you're looking at is about $375. One contract, you're looking at a profit of about $375 in one contract, just by using some very, very simple rules. Again, this is designed to keep you safe. This is designed to keep you hanging on to your hard-earned trading capital. Pretty much for me, folks, this is pretty much what I had intended to show you. So if you have any questions, feel free to type them in. If something you didn't understand or you want a clarification on, feel free to do so. I open the floor to you. Well, apparently I must be doing something very right, because apparently there are no questions right now. So I trust and hope that you understood everything that was discussed. And if you could just kindly type a yes, I would appreciate that. Does it make sense to you? Okay, Alan. I was saying this webinar will be available offline. Yes, it will be available offline, but it's only going to be available to current subscribers of Market Tea Leaves. Given that you are a current subscriber, what's going to happen is once this recording is done, I'm going to upload it to YouTube, but I'm only going to make it available to subscribers of Market Tea Leaves. It will not be available to the general public. It's one of the advantages that you have of being a subscriber. So yes, it will be available. And once I get it all uploaded and all done, I'll send out a note to everybody saying, hey guys, it's online. Here's the link for it. Feel free to play it as many times as you like, etc. And again, if you have any questions, even after the fact, which charting software is this? This is NinjaTrader. I see. Okay. It is NinjaTrader, but it's using different add-on, I guess, different add-on packages to NinjaTrader. In other words, for example, Alan, this is like vanilla. I mean, US dollar over here. This is vanilla in NinjaTrader. There's nothing really elaborate about this. These indicators are available in NinjaTrader. Okay. This, however, is using an add-on to NinjaTrader called Skeeto. All right. I happen to like it, and the reason why I happen to like it is because Skeeto does a very, very good job of monitoring and measuring HFT, high frequency trading, algorithmic trading, etc. One of the things I bring up with Market Tea Leaves is one of the things that, unfortunately, we really need to be mindful of when trading today, because a lot of these HFT programs, etc. I mean, they just move the markets in milliseconds. And for me, I found that Skeeto to be very reliable in terms of tracking that, measuring that, etc. But if you have something else that you feel comfortable with, by all means do so. One of the things I would say, as I mentioned earlier, the Darvas box, this is vanilla across the board. Any trading package, any charting package should have that. It's vanilla. Okay. Okay, well, if there are no more questions, I will end this. However, once again, well, thank you very much. Thank you. Thank you all. I appreciate it. No problem. My pleasure to do so. And I look forward to having many more with you. But again, I thank you for attending, and I thank you very much for your time. Enjoy the rest of the weekend, folks. Thanks, and take care.